Okay, all right. So as we said, I want us we focus on financial market analysis because financial market analysis is the best thing that a trader must know because it helps a lot a trader to know where the market is going. So in the beginning, we started with candlesticks. I think you remember where we have seen bullish engulfing bar, where we have seen bearish engulfing bar, where I have seen Doge candlesticks, where I have seen Morning Star, where I have seen Evening Star, where we have seen Harami pattern, bullish Harami and bearish Harami. I think you remember that. So that
Yes.
time, by the time we were talking about, we were running candlestick pattern. I can even call it a language because once you see any movement of a candlestick, you know very well where, I mean, the meaning of that candlestick, and you predict what may happen next. I think we have covered that part. If you want to go through about it, I encourage you to always come back and read this book in the beginning so that you get very well candlestick because candlestick is one of the things that we need to confirm before we take a trade. So today I want to talk about something called market structure. Normally, the market structure has only four forms. That means the financial market is only in four forms. Okay, we have what we call uptrend, and we have also a downtrend, and we have sideways market, and we have choppy market. These are the four forms. Every market, every financial market tried itself to locate in those four forms. That means if it's not sideways, it's going to be uptrend. If it's not uptrend, it's going to be downtrend. If it's not downtrend, it's going to be choppy market. That's why I'm saying once we get to know really these forms of these forms of market, this market structure, it will help us to know where the market is heading and how we can trade them according to where the market is heading. Okay, are you there? Are you there?
Yes.
So we have a trending market.
Yes, I am.
Yeah. We have a trending market simply characterized by a repeating pattern of higher highs and higher lows in uptrending market and lower highs and lower lows in downtrend. Okay, this is too a bit complicated to understand, but using the example you are going to understand. This is what we call, this is an example of a market structure. We call it uptrend. So in the uptrend, the market will move in the beginning and forms higher highs, then forms higher lows. That means the market will move here for make higher highs, then higher lows, then to again forms another higher highs, it forms another higher lows, and the continuation of this formation, it is called uptrend. So you see, the market is going up, but sincerely speaking, the market doesn't go up straight. So it goes up, it makes what I can call retracement. You see, like here, like here is a retrace. First retrace, then it goes up very well. Then when it gets here, it will again retrace. That means it will make a pullback so that it can again go back to the higher highs. Then before going also continue to go up, it is also going to make a retracement. So the market will keep moving up, 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 making retracement, keep going up, making retracement, going up. So a market in this situation, this market we call it we call it uptrend. This is the market we caught up. Let me give you an example here. For example, let's go to our FBS. Do I have uptrend here? Let me see. Let me check for the time frame. Time frame forwards. Okay. Euro USD. Okay. All right. Wait. So let me try to okay. Wait a bit, because I want to show you when we talk about uptrend, what does it mean? Look at a situation like this one. So we have we have this, we have this, we have this again, and the market retraced up to here. Let me try to get, let me go back. I get I mean, a good uptrend. So for example, look at this situation. So the market started going up here. It made a retracement here. It goes up here and retraced before going back. But let me find a clear one. A clear one that for you to understand when we talk about an uptrend market, what does it really mean? Okay, uptrend market. For example, you tired?
No.
No, don't feel tired. So you wait. Okay, this one I don't see. Okay, clear. Wait, let I try to get for you uh, an uptrending market for a long time, so that you can understand what it means. For example, let's take an example here. So the market started from here, okay? Then it goes up and it made a retracement here. This is the first retracement. Then it went up again and it pulled back here again. Before going back again, it first made a retracement and went up, another pullback, and went up another pull. So if you see this situation, you can see that the market is really going up. So a continuous going up, that's the form that we are calling uptrend market. So it is a situation where the market is going up, but they are saying we have read that in a situation where the market is making higher highs and higher lows. But to not complicate, I am saying that is a situation where the market is going up, continuous going up, making a retracement, going up, making a retracement. So then we call it uptrend. That's the situation that we are calling uptrend. That's why you see in these notes we're having, they have tried to show us a clear example of a market, and the price was going, okay, the market is already in the uptrend, and the price itself is going up, but before going going higher than continue to go up, it will first make a pullback, or we call it a retracement. Then it goes up again. It makes a retracement, it goes up again, it makes a retracement, goes up again, makes a retracement. So that's a form of a market. We call it an uptrend. Okay. Let me show you another example. Let me
Okay.
use TradingView to show you another example. Okay, maybe okay. Let me try to get an uptrend market. For example, okay. For example, here I have the market started from here and it has gone up. Then it made a retracement. It went up, it made another retracement, it went up, made another retracement until it changed its form. So Once you have a situation where the market is going up like this, now we call it uptrend. So for us to determine if the market is an uptrend, uh, we use what we call a trend line. So it's a situation where you can, like, you use this tool, then you put a certain straight line to the bottom. Okay, you try to hit the bar, like for example, those the end of those retracement. You see, like maybe you say one time, two times, three times, I mean, four times. Once it has those, you can use, we shall see it in the future. But what I want you to understand is that one form of the market so far is a market that is going up, and it doesn't go straight, it makes a retracement for it to go up. I think that one is very clear. I'll give you like an example here. The market was going up, but it started, it retraces, goes, retraces, goes, retraces. Then from here it changed the what? It changed the rule. Because the reason why I'm saying it is because when I put, I can I can put a trend line. You see, one retracement, another one retracement, another one retracement, then going retracement became problem. Then there is a breakthrough. It has broken the trend line. That one we shall see in the future. What I wanted you to understand is that the market is going up. We call it uptrend, and it's not going straight forward. It makes retracement before going again higher. So it makes a retracement or a pullback. Those are the common words that we use in trading. So you have any problem about uptrend? You can ask before I go to another one. You there?
I'm good. Maybe on another one I will see the difference because right here, for me, I see like it's the same with okay. We can move to the
Okay.
next one.
Let me
Maybe
show
we'll see
you.
better.
Let me show you the opposite of it. We have the opposite, which is called downtrend. Okay. So the downtrend, for a downtrend, it is like this. This is called a downtrend. So for it, the market, we before I go to a downtrend, let me tell you why we call it uptrend. It's because the market is moving much more higher than it moves raw. It makes a wrong steps to move higher than the steps it is making to move. So if you compare the distance from here to here, distance from here, then the distance from here, you can see that the market is making more steps to go up with a few steps to come down. While in this form of a downtrend, the market is making a wrong step to go down. This is why we call it lower lows. So the market,
Yeah.
we have lower highs. That means the market is making a wrong step to move down. You get? Then the market is also making
Yeah.
this one now is a retracement. You see, this is a pullback in a downtrend. So the market moves
I see.
down, then it makes a pullback, moves down, it makes a pullback, it moves down, lower highs, lower lows, lower highs, lower lows. So a continuous in a downtrend in a market. I mean, when the market continues to go down, doing retracement, that continuous situation, we call it a downtrend. Let me give you an example for Bitcoin. For example, Bitcoin, let me use this interface, FBS. Look at, uh, let me first delete these indicators for you. for you to see. Do you see very well? Do you see well?
Ye- Yes, I see the downtrend here.
So now you see a downtrend. Now you see it. You see it because now
Yes, I can. Yes,
if I put uh, now I can put my trend like this one. You see it? So
yeah,
the
yeah.
market dropped and there is this, it was dropping until it came back to retest that trend line. So this is number one, and it has came back, it has retested, and we expect this Bitcoin to come up to come also, so that it's going to continue in the same form, going down, making retracement, coming back to test the trend line. So in that situation, that continuous situation, this form we call it a downtrend. So a downtrend,
Right.
and I think you understand the difference between a downtrend and
Ye-
a downtrend and uptrend, right? Yes.
Yes.
Now we have the third form, okay? The third form that we call it sideway market, okay? A sideway market is a situation where the market is moving in between an interval. Let me give you an example, for example. I don't know if Bitcoin. Let us use this one. Let's change the currency. For example, put like Solana, for example, for you to better understand. Okay. So let me see if I can get a sideway market. This is an uptrend. You see it? This is an uptrend. Look at started. Let me look for a sideway market because I need you. Okay. So a sideway market is a situation where the market is moving in between a certain interval. Let me try to see if I, okay. Wait, let me use this one. Let's see if I can get it. Wait, wait. Let me see if I can get sideway market. Okay. For example, here we have a certain situation of the market move, and when you see very well, there is an interval that this market has been moving in between. For example, let me show you the interval. So I don't know if you are able to see this the red line. Do you see the red line?
It's too small.
Too small. Let me change. I'm just changing it. Now you see it. Okay. So
Which
It's no longer red. It's if you compare this situation from here to here,
yes.
the market was
Mm-hmm.
moving in between a certain interval. You see it?
Yes. Yes.
It was like moving between a certain interval. Okay. Now,
Yes.
among these three forms of the market, these are all
Mm-hmm.
of them we trade them. We use them to trade these three forms of the market. Except the last form of the market is the one that we don't trade. That one
So
I have
you
said.
mean those yellow line? You mean those yellow lines, or
I mean the three forms of the market I have said: uptrend, downtrend, and this one is called sideways. Okay.
okay?
So uptrend, downtrend, and sideways, we trade them because the market is going to respect the rules of the market. But in a choppy market, we don't trade that market. What is a choppy market there? A choppy market is a situation where the market is showing nothing, no moves that the market is showing. A situation where you see you cannot, it's not uptrend, it's not downtrend, and it's not even a sideways market. That situation we call it a choppy market. We shall see it in the future coming. But let me let me emphasize this. So to determine whether the market is trending or not, that means to determine if the market is uptrend or a downtrend, you have to use a bigger time frame such as 4 days or daily or weekly time frame. Never try to use a small time frame to determine the market structure or the market direction. So here they are saying for us to know the market, the direction of the market, we need to focus on bigger time frames. That can be daily, that can be 4 hours, that can be weekly. That means if you check the market time from within 2 hours, 3 hours, you can't know where the market is really going. For example, let me go to time frame, then I go for 4 hours. If I go for day, you can see the day is can give you like a different information, but they are telling us we need to get stick to 4 hours to 24 hours, even weekly, for us to know if the market is uptrend or if the market is a downtrend. You get it? That's what I wanted to emphasize. So I want you to, yes.
Yes.
So it is very important for you to understand these three forms, the first three forms, that is that is uptrend, because when the market is in an uptrend, we trade it because we expect the price to continue to go up. So we will always consider the buying opportunity because the direction of the market is already uptrend. Okay.
Mm-hmm.
So the same when the market is a downtrend, when the market is already in a downtrend, the same thing, we will only consider the selling opportunity because the market is making more steps to go down than the steps is making to go up. So in that situation, we evaluate that the potential of going down is higher than the potential of going up. So in brief, we trade the direction of the market. Okay. So when the market is going up, we look for the buying opportunity. And when the market is going down, we look for the buying also, the selling opportunity. When the market is in sideways, we can trade both buying and selling. Okay? For example, in a situation, okay, let's first finish this. So now, how do we trade a trending market? A trending market that can be uptrend or a downtrend. Okay. So how do we trade it? First of all, remember, I have said we need to put. I have said we need to put our time frames. Time frames are meaning 4 hours or 24 hours or daily, for us to know very well if the market structure is in uptrend, or it is in downtrend, or it is in sideways. So for example, here we have an uptrending market. We have an example of an uptrending market. So first of all, we have the market impulsive move. So the market has moved up and it made a retracement. So the reason why we call it uptrend is because the market has made more steps to go up, comparing to the steps that it is making to go down. So that's why we conclude by saying that this market, what we have here is a retracement. Retracement is like a market pullback, like because the market cannot go up straight. What the market will always do will just make an impulsive move, then it stops at the top and make a retracement a bit, then it continues to go up. So the market does not go up straight. The market does not go up straight. So what I can say that the market will just go up, then makes some retracement or pullback, then goes up. So when we have a market which is an uptrend like this one, every impulsive move, you see, we have this impulsive move, we have this impulsive move, we have this impulsive move, impulsive moves, impulsive moves. Every impulsive move is our opportunity to get profit from the market. You get why? Because
Yes.
we trade the direction of the market. So what I am saying is that, for example, the market has made a move here, then the market makes a retracement. Okay, then this retracement is our entry for buying opportunity. If you enter in the market here, then the market will move up again, then you leave the market here because the market is going to do a retracement. Then once the market makes a retracement, then this is another chance to enter in the market. Then the market makes another impulsive move. That's so you will we have different opportunities to get to collect the profit while tracing the direction of the market. Okay, we don't say let me sell. You cannot sell, you cannot take a selling opportunity in a market which is an uptrend, because the market is already moving up comparing to the way that the market is moving down. Okay, so at this situation of an uptrend, we can't ourselves decide to take a selling order. We will always look for the buying order, because the momentum of a currency or a coin is showing that the price is going to continue to go up. Okay.
So in that case, we sell.
In this case, we only consider buying opportunity because the market is already showing us that it is going up. Okay.
Mm-hmm.
So in the uptrend, no selling opportunity. We only focus on buying opportunity. Okay.
Okay.
Now, for a market that, oh, what's wrong? For a market that is going for the downtrend, okay, we will only consider the selling opportunity, I have said. So when the market is going down, we will not take a buying order, okay? What we will do, we will keep chasing the trend, the direction of the market. Because you see, for example, if the market is here and you say, the market has dropped down, let me take a buying opportunity here. When you buy here, the market will reach here and it goes down. You see the steps that the market is making to go down. If you look at it, you can see that from here, then you will be in loss because you are trading against the direction of the market. Okay? So it is better we chase the direction of the market. Now, how do we identify? How can we make a trend line which helps us to identify when a retracement will get finished and we take a read to take? So, for example, let me use this example. For example, we have here Bitcoin has moved. So first of all, we cannot take a trade in this when we are trading a downtrend or uptrend. We have to wait at least for two hits to the downtrend. For example, we have one, then we have two. So that means we are supposed to take a trade here. This is where we're supposed to take a trade. Because, and remember, we have to take only selling opportunity, you see. So because the market is going down, comes back to test the, okay, first of all, before I go very far, let me show you how to draw. We have a tool here. This tool is called a trend line. We use it to draw a trend line so that we can know when will the market retrace, to which extent the market will retrace. For example, that's why I've said that you get this tool, you come to the price where the market started dropping from. For example, if the market have started like where Bitcoin went up and started dropping from here. So I will draw the trend line from where the dropping started and I try to connect to the second, then I won't force, okay? I won't force. Now, you see, according to the trend line, you can see the market makes a lot, then it made a retracement back to the trend line, goes down, and it has come back to retest. Now you see now it's going to go down, down, down. Because once it comes and tests, it goes down, test, down, test, down. So that's why I'm not advising you to take a trade against a trend line. Even if the market goes up, still the market will continue to go down because the market, when the market has already taken direction, it is very serious and it's going down. So like now I can estimate that Bitcoin is going to drop again. It's going to drop again until it will change. The market will decide to change its direction to uptrend or to sideways. Because so the market shift from from uptrend to downtrend, from downtrend to uptrend or sideways. So unless if it has not yet decided to change the direction, then the market will move in its direction. Are we together? Or I have talked too much?
Yes.
So what we are doing is analysis. You get? And
Yeah.
I am showing you how do we determine how. First of all, let's learn how to draw a trend line to a downtrend and uptrend. Okay, because a trend line, you see this trend line, it shows is a point where the market will retrace and hit. That's why you see the market is like respecting the trend line. Okay,
So,
Mm.
how do you know exactly where to trace it?
When retracing, mm,
Where? Now, when? When and where? Okay, here huyitrasa na ryari uyitrasa.
it is when you find there is two hit, like you make a straight line, because the trend line is a, I don't know if I can call it a straight line, but when you put it, okay, when you put it like this, when you put a trend line, at least you can get one time, then two times. So now if two times can hit, if, let me say, if a trend line can,
What two times?
I mean retracement. For example, you see here the market is going down. You see the market was going down and it made a retracement. And this retracement, if I can connect it to the first down in the market, and I put a straight a trend line, then I can say, okay, the market has changed to downtrend. If I am able to connect this end to this retracement and to this retracement, that means I get to know that the market is already in a downtrend. Okay. For example, now I can take the tool. I just come, I connect. I don't force. Okay. Connect one, connect two. Okay. Now I can say every time when the market comes back to the trend line, so the price, it will also take its read to downtrend. See now the Bitcoin has pushed up to the trend line, and now it has started going down. Do you see it? Up, going down. So the Bitcoin now is going to go down until it will come back, until it will come back and test the what? It will come back and test the trend line again, and continue to go down until it will decide to change the direction of the market. But so far, as long as it retraces and reach to a trend line and fail to break the trend line, so it is still in a downtrend. Okay.
Yeah.
No, I hear no. That one means no.
There is one thing I don't get it
Yeah. What is it?
about this line. Is
Mm.
you who decided to trace the line?
Yeah, it's me who decide to draw the line, because I see I can connect using a trend line connecting two or three retracement.
Okay, to draw that line, do
Mm.
you waiting? What do you? Okay, do you waiting until the first this how they call it? Aka kantu ko hejuru kandi uconnecta igendera chako. Do you waiting on that? or do you just do
No, I
after
wait.
this?
At least
Uh,
I wait for for this one to get connected. You get? Because I need to make a straight line.
okay.
So I have to wait until the market makes at least two moves. One move, then two moves back to the trend line. Then this I can decide to take a trade here or even here, because every trade I will take
Mm.
it at the trend line.
Okay, so now I think what this the first one you count in on or you don't put on account?
This
Like
one,
the
okay.
first one where the line started.
This one and this one, we don't
This
take
one, yes.
really a trade, because it is giving us a formula. Okay, we need a formula so that we can know where the market is going. Okay, because
Mm-hmm.
this move and this move, we won't take a trade, because we are this move and this one will form a downtrend. Okay, so it will give us an opportunity to confirm a
Mm-hmm.
trend, if it's a down or if it's an uptrend.
Okay.
Let's take another
Yeah.
example.
Now it's better.
For example, wait a bit. Let me do. Okay. Okay. For example, here, where do I have uptrend? Okay. Let me see if I have a CS uptrend. CS uptrend. Maybe let me go to US Chief and I change my time frame to 4 hours, maybe. See if I can get. Oh, okay. Okay, for example, look at this move that is here.
Too many lines here.
Eh? There are too many lines.
Too many lines here.
Wait, I delete them so that you won't be confused.
Up trade. This is up trade.
Yeah, this is an uptrend. Because now you can connect this one, you can connect, because you have one time, two times. This is a retracement, goes up, retracement number two, up, then we are waiting for a retracement back here. Now A trend line, okay? Why do we use a trend line? Because we believe once the price, once the currency or a coin follows this procedure of coming to doing retracement and comes back to the trend line, it will always goes up, comes and retest, goes up. You can't you think why the price, why the market is respecting a trend line? You see, it has gone up, retraced, it hasn't gone down, then came back and respected, goes up, and we are waiting it for it to come back and retest. It is a trend line really helps to determine a downtrend and uptrend because it helps us to know if the market is uptrend, if the market is a downtrend. That's even the only target that I had today. I wanted you to understand what is the structures of the market, or let me call it forms of the market. I wanted you to understand, I wanted you to understand these forms, that we have uptrending market that goes there. Then I wanted you to understand that we have this one, which is downtrend, okay, for BTC, the downtrend, and we have also sideways market. This was only my target for today. I wanted you to know those forms so that whenever you try to see in your chart, okay, so that whenever you try to see in your chart, you understand what might be going down in the market. Okay, you understand? I wanted like you understand,
Yeah.
you know those forms, okay, and so that you know that those forms they are there first of all, okay, so that whenever you're checking, you are going to know that this market, according to what I have seen, you are able to say, this market is a downtrend or this market is uptrend. That's what I firstly wanted you to know. I wanted you to know that we have uptrending market, we have downtrend market, we have also a sideways market. Now, for a sideways market, we don't use a trend line to determine, we use what we call support and resistance. Like we come here and we use normal resistance, so we can look for a situation like, for example, let me show you. So if you can see here, from here to here, the market was respecting the movement. It was moving in between the interval, that is between this line down here, we call it support, and the up one, which we call it resistance. So in this situation, when we get a market that is moving in between the resistance and support, we call it a sideways, market. So from here up to here, you can see that the market was respecting the support and resistance. So the market was trading in between. So it is in this way, this one we call it a sideways market because,
So,
yes, hello, you're there?
um, so when you said they was trading in between, you mean like they was trading
I
either
mean that
up, either down?
I mean they were moving in between. Okay? So this is what I mean.
How?
I mean the market moved up to here and did not break and go up. it came back and retested the support. It didn't break so that it goes down. It went also back to this resistance level and it didn't break end line. It came down a bit and respected this one until it moved and disrespected the form. But from here up to here, so it was the market was in a sideways form. Okay. So my target of today was that
I
you
don't understand
understand.
this one.
You don't understand this one?
Hmm?
You don't understand this
This
one?
way, but
Mm.
up trade and down trade. Yes, I don't understand this way.
So now a sideway is a situation when the market is trading between those lines. The upper line is called resistance and the down one is called support level. So as you see, this currency was, this coin, it took time trading. Its movement was between the support and resistance. Even if the movement was there, it could move up, but it couldn't go beyond the resistance. Even if it was moving down, it didn't go below the support level. Even if it tries to move or again up, it didn't go up beyond the resistance. Even if it manages to to go down, it didn't break the rule, it didn't break the resistance. Okay, so once that I'm saying from here up to here, so the market was in sideways until it changed its mind to go down now. Because now if from here going here I can trace there and I get a trend line. But I'm now saying a sideways market is a situation where the market will be trading between resistance and support level. So how do we draw it? How do you draw support level? First of all, you would forget first hit. You see, one, two, three. Okay, so you can say one, two, three. In these three times, the price was hitting at the same price. You see it hitting here, here, and here. The
Yeah.
price was hitting the same price. So once you get one, two, three, you put the line. Once you get one, two, okay, so you can put the line for you to get the movement. You conclude by saying that the price was moving between the resistance and support level, and you are the one to draw the resistance basing if the price has hit one, two, one, two. Now you can put a support and resistance level to, and you confirm that the market is already in sideways market. Okay.
Yeah.
Where is it? Okay.
Mm. Wait. Yeah.
So my target of today was like I want you to understand how the market moves. It moves in the uptrend. Okay, this is what I want you to have in the market, in the head. Okay, not in the market. I want you to know that the market moves in uptrend form. And uptrend form, the market doesn't go straight. It makes an impulsive move. It moves up, it makes a retracement, it moves up again, it makes a retracement, it moves up, makes a retracement again. So when it makes moves, those moves going up, and you are able to put a trend line on that uptrend, so you confirm that the market is an uptrend. The same thing to the downtrend. When the market is moving down and making retracement and continues to go down, and you put a trend line, you find that the market is making retracement, continue to go down, retracement, continue to go down. You confirm and say that the market is already a downtrend. Okay. So for the sideway is when you were able to trace like you are able to see that the market is like moving in between the support and the resistance level. Okay, so we shall go for further thing, but what I wanted you to understand, I wanted you to understand the market forms, I mean the market structure, and their names first of all, and how they are different, and their difference. That's what I wanted you to understand today.
Mm-hmm.
Okay,
Yeah. Yeah.
don't worry other things of designing support, I mean putting support, putting resistance level, making a trend line. We will do it on next session, but so far I wanted you to understand the forms of the market, how the market moves. It moves in an uptrend, moves in a downtrend, and moves in a sideways. This is what I wanted you to understand, so that we can be so that next time we go, then the details of trading it, what do we need, how do we trade uptrend, how do we trade downtrend, and how do we trade sideways market. Okay.
Okay.
All right. So
Yeah. Yes. So
any question, please?
not right now.
Not right now. Okay. So now I'm saying goodbye, but I encourage you to read the other book I gave you. You read this about this market structure. Maybe you can understand more comparing to what I have talked today. Okay. If you have any complications, let me know,
Yeah.
so that I can keep like helping you to understand. So see you next time. Thank you very much.
When?
That's Saturday and
Hello.
Sunday. Okay. Hello.
Okay.
Yeah.
Hello.
Yes.
Your network is not good.
I said Saturday and Sunday, right?
Okay.
Thank you.
Yes. So no problem.